finally got that expected breakout above $50 last year in October. And then silver quickly shoot up to 120. Now it came back down. It was a healthy, necessary pullback. We basically have tested more or less that breakout zone around $50. The low came in, I think, 54.70-ish or something a few weeks ago. And just based on the technical pattern, there is another outstanding target for silver sitting somewhere between $250 and $500. The gold-silver ratio at, I think it was 43 in the low in January. In 1980, I think the ratio topped at 15. So 43 is still very conservative. It doesn't fit together for me with the theory that we are in a secular bull market. So I'd rather think that this ratio can go down to 20-1, maybe 10-1.
Silver's dramatic breakout may be only the beginning of a much larger move. After surging above the old $50 ceiling and reaching around $120, the metal pulled back sharply, but the broader bullish structure remains intact. Florian Grummes, a market analyst focused on precious metals and technical price action, emphasizes that the correction was healthy and helped retest the former breakout zone. He argues that silver still looks undervalued relative to gold, especially with the gold-silver ratio far above levels historically associated with major secular peaks. His longer-term technical outlook is striking. Silver could eventually target somewhere between $250 and $500. He also believes the gold-silver ratio could compress toward 20-1, and perhaps even 10-1, suggesting substantial upside if the secular bull market continues. Demand from AI, solar, and China adds another layer to that case. New silver producers entering production may also attract attention as margins potentially expand. For investors, the key message is that volatility may remain extreme, but the larger trend could still have room to run. Now, we present the clips from Florian Grummes' interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
I've been publicly and honestly turning bearish in end of January. I advised to take profits, and I've been avoiding the whole sector basically for the last 6-7 months. But recently I ramped up my allocation again, and I think that the sector is very interesting again. It was just too much of a euphoria and overbought situation back in January. But many of those mining stocks came back 30, 40, sometimes even 60, 70%. And as you rightly mentioned before, the big picture story has not changed. And so I assume that gold and silver in the secular bull market will make at some point new all-time highs. And it might take a little bit longer, but overall, that will, of course, benefit all these miners. And the bigger producers are all making a lot of cash at these price levels, 4,000, 4,400 gold. And they would have to deploy that money to buy new projects, meaning to go and shop for juniors, explorers. And I think this is now probably the next wave that we're going to see over the next maybe 1 to 3, 4 years. We haven't seen any M&A craziness in this bull market yet. And I think that's going to come. So that's why my focus is more now on the smaller side of the sector, meaning the juniors and the explorers are definitely more interesting now. If you would have told me 5 years ago, oh, Florian, we're going to trade at 5,000 gold at some point, I would have expected, first of all, an even better performance by many mining stocks, and I would have also expected much more M&A craziness. But so far, we have more seen like deals that make sense, right? I mean, there was no like crazy deal with like crazy premiums or anything. But I can also tell you, I mean, the sector is very active. It's very busy. It feels really good to be in our space. But I think we haven't seen any really crazy, extreme euphoria yet. So that will come at some point. This is a complicated, difficult business, and only 1 in 1,000 mines or projects usually becomes a mine. So you want to stick with people that have a good track record and that have proved in the past that they can do this. Of course, you also want to stick to more or less good jurisdictions. I think that will also become more and more important down the road. And especially, of course, Canada is a wonderful jurisdiction. And a big million-ounce gold projects, that's definitely very interesting now when we talk about the M&A situation. I think that's a part of it. Or companies that can quickly come into production in the next 1, 2, 3 years, and then suddenly start benefiting from these high metal prices, right? I mean, that's usually going to create a complete revaluation of a company and a story. So that's very interesting. That's what I'm looking on. Yeah. And of course, if the silver price can recover at some point, especially silver stocks should be very interesting also going forward. I have called that pattern the silver market, the mother of all cup and handle patterns. We finally got that expected breakout above $50 last year in October, and then silver quickly shoot up to 120. Now it came back down. It was a healthy, necessary pullback. We basically have tested more or less that breakout zone around $50. The low came in, I think, 54.70-ish or something a few weeks ago. And just based on the technical pattern, there is another outstanding target for silver sitting somewhere between $250 and $500. And any silver producer who is able to produce silver below $50 will make a lot of money at those silver prices at some point. Silver has been used. We know that it's not sleeping in the bowl somewhere. We know that this is a very important metal for the AI boom. The Chinese need it, the solar industry needs it. And I think we're going to see more use cases exploding over the coming years. And I think with the gold-silver ratio at current price levels, I think silver is, again, pretty undervalued. And hence, I like it again. I'm definitely 100% sure that this bull market has not topped with a gold-silver ratio at, I think it was 43 in the low in January. In 1980, I think the ratio topped at 15. So 43 is still very conservative. It doesn't fit together for me with the theory that we are in a secular bull market. So I'd rather think that this ratio can go down to 20-1, maybe 10-1. And so the best is still to come here. And again, silver producers, and especially companies who will soon or in the next 1-2 years start producing silver, new silver producers, I think are extremely interesting, and we'll see a complete revaluation.
Gold has regained technical momentum after climbing back above its 50-day moving average, a level that had capped price action for months. That shift strengthens the case for a continued recovery, although the next area may be harder to clear after such a fast rally. The key upside target is around $4,500, where the 200-day moving average sits. The broader resistance zone stretches from $4,400 to $4,600, so gains could become more difficult as price approaches that range. Silver remains constructive, with $70 described as a realistic summer target. The short-term view is bullish, but the speed of the move raises caution. Fast advances can bring late buyers and weaker hands into the market, increasing the chance of pullbacks. Gold and silver may still have upside over the coming days and weeks, while September and October could provide a test for the trend. Now, let's get back to the interview.
I mean, that was expected, to be honest. I mean, I've been writing about a bottoming process in June, July, and also clearly said that I was expecting a recovery, a bounce. And my target is at least the 200-day moving average, which sits around 4,500. So that's been my playbook. I was surprised that it happened so quickly. I mean, we are up $400 this morning within 1 week. It's a big move. 2 months, nothing's going on. Everyone is falling asleep or getting completely irritated by these crazy moves, $100 up, $100 down. Nobody trusted it anymore. And then suddenly there's the move, $400 in less than a week. So, that's how the market usually is. It makes sure that the vast majority is always on the wrong side of the trade. Either when it's crashing, everyone is long. When it's time to be long, everyone is either giving up on the sidelines or dramatically short. And this time it seems these 2 months, the sideways consolidation in June and July basically really created such a difficult environment for most people. They either didn't care anymore or gave up or just lost interest anymore, I guess. So suddenly there's the big move. Of course, fundamentally speaking, you can say that it was triggered by the new round of liquidity, thanks to the Fed basically buying or giving collateral to the Japanese in exchange for with treasuries to make sure that they don't dump their West bonds on the market. So yeah, here we are, mid of August. I think it's still bullish. It's looking good in the short term, and we have to see how this plays out. If this is more than just a dead cat bounce or a recovery after this big downtrend since January. The China story is important since basically the beginning of the secular bull market 25 years ago. And it keeps being important. And of course, it's not only Shanghai, but also that second gold hub that the Chinese are building in Hong Kong now, basically to have a similar access like the Western markets had over the last few decades with London and New York. Now it's Shanghai and Hong Kong. So it's important. But personally, I primarily look at price and price action, but I follow all the news, of course. Well, first of all, gold. Gold was able to jump back above that 50-day moving average right last week on Wednesday, and that's been the first time that gold managed to get back above the 50-day moving average since mid of March. And during all this time, it had been trading below that moving average, and it basically this line capped the gold price. Now it's back above it, and that usually simple old school technical analysis tells me now the market wants to see the 200-day moving average, which has been lost in June, early June, and this moving average is trading at 4,497. So yeah, give or take, let's say 4,500 is the number that I think gold market wants to see. At the same time, we are already approaching now this big downtrend in place since end of January. So this whole zone, I would say 4,400 until 4,600, very strong resistance. Already we have a daily overbought chart. It was a heck of a rally the last few days, quite fast. I think it's going to be more difficult going forward. So that's the first thing for gold. But I think we're going to see 4,500 at least. And for silver, my number was $70. I think that's also a realistic number for this summer. And I'm a bit skeptic now that it has moved so fast. As a trader, I would like to see it a little bit slower and more sustainable, step by step moving up, giving some pullbacks, giving people the chance to get on board. This happened so fast that I assume many people are now coming rather late. And that always creates a lot of weak hands in the market. So we have to see how this plays out. But right now, in the short term, I'm definitely still bullish and think there's still some upside. And then we have to see how everything behaves into autumn, basically September, October. We have the Jackson Hole meeting coming up that usually gives a first direction for the market. Overall, it doesn't look as dire as it did 2 months ago when you combine all the markets together. We had this big, or it looked like a big correction could be around the corner in the AI stocks, which of course, if liquidity disappears in the stock markets, metals also have a hard time. But it seems that this is not playing out now. Everything has calmed down, new liquidity injections. So yeah, it doesn't look so bad anymore. We have to see. But for gold and silver, I'm optimistic over the next few days and weeks.
The precious metals story may be entering a different phase, one where the biggest opportunities are not limited to bullion itself. Large producers are generating cash at elevated gold prices, and that capital eventually needs somewhere to go. Smaller miners, developers, and explorers could become the next beneficiaries. A prediction is that a stronger wave of mergers and acquisitions may unfold over the next 1 to 4 years. The sector has not yet seen the kind of extreme deal-making or euphoria often associated with mature bull markets, which leaves room for activity to accelerate. That is why attention is shifting toward juniors and explorers with credible projects, experienced management teams, and strong jurisdictions. The broader metals outlook remains constructive as well. Gold and silver are expected to make new all-time highs at some point in the secular bull market, while new silver producers coming online over the next 1 or 2 years could see a meaningful revaluation if higher prices hold. At the same time, selectivity matters because mining remains a difficult business and only a small fraction of projects become successful mines. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.